Hello and welcome back to PreciseAlgorithmTrading.com. It's Sunday, May 14th. I'm doing the weekly wrap up, really talking about price action and what the markets are doing for Friday, May 12th. I wanted to start here with our website and show you that just walk around a little bit. Um, this is our homepage, and we go into some things about equity curves and uh, looks like I need to get rid of that on the home page. I'm going to take multi-charts off of all this. People that use multi-charts generally know that TradeStation is uh, compatible for multi-charts. So I don't want to confuse people by having two systems because really it's TradeStation we're talking about. Then these examples, and they are movies. You can kind of watch those. Anyways, and then these are uh, the reports that come out of TradeStation, and they were obviously snapshotted at a point in time. I think it's obvious anyway, and so like they're not. I don't keep them up all the time. Um, so they change every day, and sometimes through the day. So, anyways, then the algorithm trading systems tab is this one right here. This is goes through, explains a lot of this stuff. There's a video here, and then our tools that we use. The in this is actually Thinkorswim that we use for uh, manually trading, which is totally different than automated trading, but it's all algorithms. It's if this, then this, and if something happens, then something else. You know, you make a trade, or you get out of a trade. That's it. Uh, it's actually simple. It's complex, but it's simple. And literally, it's that. If something happens, then you get into a trade. If something else happens, then you get out of a trade. And sometimes it's multiple somethings, but that's it. Then the products tab. This is where we actually sell this stuff, and I wouldn't buy this stuff until you understand some of the intricacies to it. And then the daily reviews, where I put up a daily review. And this tab right here is archives, and we've got a bunch. I mean, it's not. I think I'm going to keep roughly 30 days in here, but there's a bunch. And yeah, terms. Make sure you read our terms. This is we don't trade for you. All we're doing is showing you what we do, and your trading is your trading, and that's how we feel about it. And besides that, I'm not licensed or anything. We're not licensed here, so this is all more for education than anything else. And for the fact that I actually keep up this daily review, I'm already doing my own homework. That's really what this boils down to. In order to be a trader, and you got to work at it, and you know you have to literally do homework to keep up with what's going on. So, all right, getting into the actual trading, I wanted to give a shout out really to these guys. This is TrueMarketInsiders.io. True Market Insiders. I've followed these guys for a long time. This is a really good system for, or a good place to read about the bullish percent index. And I think you can, well, I know you can. You can sign up for these guys for free content, for some educational content, and you can also, you can go further with them if you really want. So this explains in really nice detail the bullish percent indexes, and then it also talks about, or actually, it's still only talking about the New York, the NYSE bullish percent index, and the one that comes from Investors Intelligence, which they call out down in the bottom right hand corner there. Um, the and then they go into, they got history on the bullish percent index. So anyways, I wanted to show you guys that so I didn't have to recreate it. Then I go into stockcharts.com, and you got to realize that when you type in bull here, these bullish percent indexes, I'm sorry, let's do bullish instead. these bullish percent indexes are different than the one I was just showing you there. In that they're similar, but they're different. So these are actually sector based, and they're all even the NYA here. I don't know what their algorithm is, but it's a little different and it moves a little faster than the other one, which I actually find helpful because I compare the two, and that helps really give you a better picture. So bullish percent indexes, for what it's worth, is a measure of bullishness in the market. Therefore, it's also a measure of bearishness because you. And let me just show you one. So here's the Dow Jones. It's showing us that 53.33% of stocks in the Dow Jones, and there's only 30 of them, are on a point and figure buy signal. And a point and figure buy signal is literally when the most recent column of X's exceeds the most recent column, or the previous most recent column of X's. And if that, like this chart happens to be, this is on a point and figure buy signal. So the most recent column of X's has exceeded the previous column of X's to the upside, even though we're on a column of O's right now that needs to flip back around to a column of X's to be really fully bullish. So I think they get into all that over there, but if not, just follow along and you'll eventually get it, I think. So anyways, that's a measure of bullishness, and there's only 30 stocks in the Dow Jones Industrial Average. Well, the New York Stock Exchange has something like 8,000 stocks. I don't even know what the number is. The transportation index is its own thing, and it's got a certain amount of stocks. But all of these are going to measure a percentage that are on a point and figure buy signal. So one that's fun for me sometimes is, well, let's look at it. Gold miners for fun. When the gold miners get all the way, you can see it happened in between 22 and 23 down here. That's the year. They got all the way down to 4%. Well, when you get down to 4% of stocks in the gold miners index, that means that 96% are on a sell signal. And when you get that kind of percentage, then I don't want to say has to, but it almost has to go back the other way. And that's how you can use this. So let's look at the NYA. It's on a point and figure sell signal, and it's on a column of O's, and 43.8% of stocks in the NYA are on a point and figure buy signal. That's really all we need to read there, but it's a measure of bullishness. The transportation index, it's on a point and figure sell signal. It's on a column of X's. It had zero change on Friday. There you go. The NASDAQ, it's on a point and figure buy signal because the most recent column of O's has not exceeded the previous column of O's to the downside yet. And it's on a column of O's. And on Friday it went up by 0.51%, and 36.72% of the NASDAQ stocks are on a buy signal. The OEX, now let's go down to do the SPX first. The S&P 500 has 500 stocks, and 50% of them on the nose are on a point and figure buy signal. That means 50% of them are on a sell signal. And on Friday it went up by 0.4%, but we are on a column, or on a point and figure sell signal, and on a column of O's. So the let's do the OEX. The OEX is the S&P 100, and so there's 100 stocks here. 54% of them are on a point and figure buy signal, and we're on a point and figure sell signal because our most recent column of X's has not exceeded to the upside the previous column of X's, but the most recent column of O's, well, I shouldn't say the most recent because we're on a column of O's. The most recent completed column of O's exceeded the previous one before that to the downside. So this thing hasn't. It's the last signal was a point and figure sell signal, even though we came up with a column of X's and got up to 72, right up to the level of 72, or at least filled in the level of 70. Is probably the better way to say it. And we didn't exceed up to 72 and past the previous one. So this one's a lot of back and forth. It's on a column of O's, but hopefully that makes sense. But it also went up by 3.85% on Friday, so it was a relatively bullish move in the OEX, which can give us a heads up. Then the NDX, the OEX and the NDX are kind of my favorites to watch, just because they give you a little bit more of an indication, a faster indication of what's happening in the market now. So this is 55% of the NDX, which is the NASDAQ 100. 55% of them are on a point and figure buy signal. This one's on a point and figure sell signal as of right now, because the recent column of O's exceeded to the downside the previous column of O's. But we're on a column of X's, and it looks like we're advancing because as of Friday we actually added an X. That's why it's green. And the 3.77% of them actually went up. So, or we gained 3.77% this on Friday. So that's how that works. And I usually start with the actual markets, but that's kind of like what's happening under the hood, because the actual markets right now have been just walking sideways. Now it's chopping sideways because they go up and then they go down, then they go up and then they go down, then they go up and then they go down. Right now they're right in the middle of that. And I'll go ahead and draw a box. It was a little too random there. So let's activate it and drag it down to the high. So there's your box. When this thing, it's been ping-ponging back and forth inside this box. When this thing takes off one direction or the other out of this box, it's going to have some velocity to it. So, or likely will, I should say. So, as of right now, you know, my bet would be that we're going to go higher because, and I've covered this a little bit. Here's the Fibonacci lines, and if you look over on the weekly, the 1272 extension's up there around 4,300, and you know, right now it sure seems like everything's going to want to get up there. We are on the TrueMomo indicator on the bottom on the right hand side. It's red, so it's been going down, but we got a buy signal on Thursday. This is the S&P 500, by the way, and you know, it's still a buy signal. You know, it's still on a buy signal for Friday's action, even though it pulled back a little bit. So all right, that's the S&P. The Russell, we actually got a point and figure buy signal on Friday. I'm sorry, not a point and figure buy signal, sorry. We got a TrueMomo indicator signal on Friday for a buy signal. So this one is more precarious, but we got the signal on Friday, which is, you know, that's it doesn't mean much until you add it together with everything else. It is red. We've been red for a while. It's been in a downtrend. We've got these downtrend lines that we've drawn on here. The weekly chart is down on multiple ways. By the way, I threw on a different indicator here that actually I built this weekend. I'm comparing a couple different things. But the other indicator that I've had up there, which is our uh, red trade scan indicator, I think is probably superior to this, but I'm actually doing some study back and forth with it, so I thought I'd just throw it on here, uh, show some differences between some indicators. So the YM is the Dow, and it doesn't have a buy signal. It's actually bearish on everything. It has a squeeze. That's a Bollinger Band and Keltner channel squeeze that has fired as of Friday. So in theory, it should fire and go down 6 to 8 bars because it came from a bearish condition. Now, that's in theory. My opinion, this market wants to go in the direction. A lot of people will see a squeeze that fired. They'll want to get short, and that's exactly the kind of thing where if too many people get short, this thing will rally. And the overall market is usually measured by the S&P 500, so whatever the Dow does, it's just been a laggard a little bit through this with the S&P. The Russell obviously has been the worst laggard because we just looked at it. And then the NASDAQ has really been the winner of it all, and it's fired long. So it had a buy signal back here on the 5th of May, and now we're taking off. And we're above the 786 line, and that matters to the people that follow Fibonacci's. And by the way, I drew this line back here. I had to have drawn it that day, 3.9, and look how we're advancing to possibly get to the top of it. It'd be fun if that happens. We've been tracking that. This is something to look at. The 10-year note is a measure of, it can be a measure of inflation, and it's been actually selling off lately. So I just keep an eye on that. It was getting crazy here back in the beginning of the year, and now things have kind of slumped for inflation, which is I think a good thing. The transports have been kind of following the Russell, which makes a lot of sense to me because the transports and the Russell both are forward-looking indicators, and if everything's not bullish together, that's what's been creating a lot of the sideways action, if you ask me, is some of the markets are wanting to go higher, and these markets are treading water or going down, and we have to get everything up and going if we really want markets to get bullish again. So it's got a point and figure, or not a point and figure, a true Momo indicator buy signal on Friday, which is good news if you're a bull, but it's still pretty bearish on the weekly. And then oil might take a second to load. Just because sometimes it does. There we go. And this is actually where I was talking about. It pulled up hard off of this hammer candlestick on the 4th, and when it got up here to this moving average, these moving averages, they're on here for a reason. It literally rolled over from there, and we could kind of see that happening. We were bearish in a lot of things. Everything was mostly, the daily for sure was down on the true Momo indicator, and so that hammer candlestick is a great place for a lot of people to think they can just jump into a market and it'll go higher from there forever, and that just doesn't happen like that. So the question is going to be, when do we retest? Do we retest the bottom, or do we put in a new higher low? And if we put in a higher low, then chances are we're possibly going to see a buy signal on the true Momo indicator, and that could potentially lead us to higher markets in oil, higher prices in oil. All right, that's enough of the markets. And by the way, if you look at Amazon or other stocks, they follow these same kind of rules, which is why I'm showing them to you. And I'll go through all my individual positions and make sure I'm on the right side of whether I'm buying or selling. And then our automatic trading systems, I'll go through these pretty quick. So here's the Dow futures. These are the ones, these automatic trading systems, you turn them on and you turn them off and they trade themselves, which is kind of nice, all off of the rules that we've got baked in. So it's been a lot of volatility here lately. It's fine. I recalibrated this. I went through that a weekend or two ago. These are the individual trades that this system will actually, you can follow inside of the system. And the bottom line is, this is the action that you watch, and is everything kind of working the way it's supposed to? You know, you're supposed to win more than you're supposed to lose, all in. That's what makes an upward flowing equity curve, which this is 12 months worth of data. And that's 12 months worth of the results of our trading. So it technically goes from 0, the way we trade, to 230,000, and we wanted to just do that over and over again, year after year. This is the Russell, and this is the quarterly contract or the quarterly action, and then these are the trades. And you can pause this or slow it down and take a look at this column right here. This is what it looks like after well, that's 519 to 512, so it's just it's almost a year's worth of data. This is the NASDAQ, which has been going sideways lately on our equity. And again, you can look at your individual results. And in the long term, it's a great system. So that's what I got for you guys. Hopefully everybody's following along, and you guys are learning something here. So have a great week, and oh, by the way, happy Mother's Day to all the mothers out there. Take care.